Q2FY23 earnings conference call. We have with us today Mr. H.K. Agarwal, Managing Director, Grasim Industries Limited, Mr. Pawan Jain, CFO, Grasim Industries Limited, Mr. Jayant Dua, Chief Executive Officer, Chemical Division, Grasim Industries Limited, Mr. Rakshit Hargave, CEO, Paints Business, Grasim Industries Limited. As a reminder, all participants are in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please press star 0 on your touchtone telephone. Please note this conference is being recorded. It is now my pleasure to introduce your host, and I would now like to hand the conference over to Mr. Pawan Jain, CFO. Thank you, and over to you, sir.
Good evening and a very warm welcome to all of you to this earnings call of Grasim Industries for Q2FY23. As you all know, the global macro environment is passing through difficult times. We are witnessing inflation levels, especially in the developed economies, not seen in the decades. Tightening of monetary policies by central banks across countries is leading to recessionary market conditions in many parts of the world. The ripple effects of the ongoing Ukraine-Russia war and COVID-induced lockdowns by China are adding to the challenging situation across the world. On the positive side, the Indian economy is showing resilience, supported by the domestic consumption and expected to be the fastest growing large economy. Coming to the company level key initiatives, as shared earlier, Grasim is investing for building its new growth engines in the form of 2 new high-growth businesses, namely paints and B2B e-commerce. With our grit, we are on track for commissioning of our first paint plant by Q4FY24 and remaining plants by FY25 in a phased manner. Construction is in progress at 5 of the total 6 sites for the paint business. The statutory approval is expected to be in hand soon for the remaining 1 plant. Other activities for the launch of business are progressing parallelly. Progress on the B2B e-commerce business is also on track for commercial launch of minimum viable product 1, that is MVP 1, by Q2FY24. Product categories to be covered by the platform include cement, steel, doors and windows, kitchen and electricals, paints, sanitary ware, plumbing and tiles. The leadership team hiring is ongoing and expected to be in place by Q4 this year. Simultaneously, technology partners for the platform are being finalized. In our existing businesses, the board has approved an additional capex of Rs 565 crore, out of which approx 382 crore is expected to be spent in current financial year and remaining will be rolled over to the next year. The additional capex is mainly towards land purchase for chemical business for chlorine VAPs expansion and debottlenecking in our pulp plant at Harihar that will take the capacity of the pulp to 260 TPD, making the Harihar unit a fully integrated VSF plant. The debottlenecking will marginally increase the pulp integration by 2%, taking it to approx 37%. On the ESG front, in line with our commitment to cut carbon emissions, the chemical business now sources about 10% of its power requirement from renewable power, which will increase to 14% by Q1FY24. Advanced material business is implementing a plan for sourcing 100% of its power requirement from renewable energy by Q1FY24. The textile business has increased the share of renewable power to 15.7% in H1FY23. If we compare with FY20, which was 0.8%, it is a significant increase. VSF business has consecutively for 3 years maintained its leadership position in Canopy's Hot Button Report 2022 by securing highest category, that is dark green shirt. Grasim's focused approach towards sustainability initiatives has led to a substantial improvement in Standard & Poor's DJSI score at 88th percentile for FY22 compared to 76th percentile of previous year. I will now briefly touch upon the key operational and financial highlights for the quarter. This quarter has not been good for the MMCF industry globally, and we have been no exception to this. VSF business reported revenue of 3,241 crore and EBITDA of rupees 212 crore. EBITDA is declined by 59% YOY. The decline in EBITDA is majorly because of lower demand due to subdued market conditions in the developed economies on account of inflationary recession and increase in cost of key inputs such as pulp, caustic soda and coal. The high cost of caustic soda is reflected and offset by the higher profit of the chemical business of the company. The VSF sales volume dropped by 14% on QOQ basis due to demand slowdown and cheaper imports from Indonesia and China. Grey VSF September 22 exit prices were down by 9% compared to June exit prices. Cotton prices declined by 24% in comparison of quarter-end exit prices. Considering the prevailing demand conditions in the VSF business, the company has rationalized the capacity utilization at approx 70% for VSF phases. VFY business reported a strong performance for increased sales volume, recording a growth of 31% YOY. High consumer demand in the domestic markets, supported by the festivals and wedding season, has augured well for the VFY business. On the positive side, the chemical business reported yet another quarter of robust performance, recording an EBITDA of rupees 609 crore in Q2FY23 on the back of higher caustic soda sales volume, which increased by 17% with a stable demand environment and better eco realization. International caustic prices have declined on QOQ basis due to increased availability on account of easing of supply chain disruptions. ECU for Q2 FY23 stood at 49,503 per MT, which is an 89% increase on YOY basis, but an 8% decline on QOQ basis in line with the global trend. Oversupply and low downstream demand impacted chlorine realizations, which continues to be in the negative territory. The total chlorine integration percentage, including pipeline sales to our dedicated customers, now stands at 61%, which was 56% in Q2 FY22. Reaping the benefits of being a conglomerate on a standalone level, revenues for Q2 FY23 stood at 6,745 crores, which is an increase of 37% YOY, and the quarterly EBITDA of rupees 1,712 crores and paid before exceptional items at rupees 1,052 crores are 14% and 11% up on YOY basis. Here I would also like to say that both EBITDA and PAT for the quarter at standalone level, the highest ever quarterly numbers for the company. Consolidated revenue for quarter is up by 22% YOY at 27,486 crore rupees, led by robust revenue growth for both key subsidiaries, that is Aditya Birla Capital and Ultratech Cement. Consolidated EBITDA at 3,783 crore was down by 12% YOY, mainly due to cost pressure at Ultratech Cement. As of 30th September 2022, the company continued to be net zero debt with a net surplus of about 230 crore rupees. With the large growth investment plans, the company is well positioned to participate in the high growth trajectory of the country. I would like now to hand over the call back to the operator for Q&A. Thanks a lot to all of you for joining this call today.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star 1 now. We have a first question from the line of Sumangal Nevatia with Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. My first question is with respect to this increase in capex. So there's a 380 odd crore increase this year, both under the head of existing capacity increase. So if you could just explain where is it basically, what is the capacity increase and debottlenecking incrementally happening with this capex, both in VSF and chemical? I mean, there was some discussion in the opening remarks, but if you could just elaborate on that, it would be very helpful.
So the new capex proposals approved by the board are for two main projects. One is expansion of our pulp capacity, which we have a pulp plant at Harrier. So from 210 TPD current capacity, it will be increased to 260 TPD. With this, our Harrier VSF plant will be fully integrated. In the sense, we will have full pulp requirement made by our own pulp plant. So that is one part. The second part is we are acquiring a large piece of land at Vilayat location to take care of our plans for the value-added products expansion in the chemical business. See, our currently Vilayat land is almost fully utilized, and we will need the new land parcel for the plants under our webs business. So these are the two major products. The major projects. The capacities will take time to come up. The spending will start happening from this year, but like VSF, the pulp plant will take about 2 years to this 50 TPD increase.
Understood. So for the chemical division, this 250, 260 crore kind of an increase in FY23 is entirely the land acquisition which we are building, right?
Yes, this is a Vilayat site. Our Vilayat current land parcel is fully utilized, and we will acquire this land for all our future expansion requirements.
Okay, and for the VSF, for the pulp, what is the total expenditure? I mean, so 100 odd crore, I see an increase in FY23, but what would be the total expenditure towards this increase in capacity for pulp?
So total from out of which current year spending will be about 90 crore rupees.
In total, you said, sir?
227 crore.
227. Got it. That's helpful. My second question is more from a longer term perspective on the VSF versus cotton prices. Now, if you see last 6 months, VSF prices are outperforming cotton in the downfall. But before that, VSF prices underperformed the cotton rally for a period of 18 months to 24 months. So going forward, if you could just share some perspective as to how should we see the normalized spreads between cotton and VSF and our expectation for VSF prices in the coming quarters?
So, cotton and VSF prices are directionally correlated. They generally move in the same direction, but the extent of increase in one doesn't necessarily reflect in the same increase in the other. So as you said, last 1.5 years, cotton prices was rising much faster or much more compared to VSF. So VSF has its own dynamics of capacity and demand, and cotton has its own dynamics. So this time, cotton prices have corrected much sharply, but VSF prices have not corrected to the same extent. So similar situation is expected to continue. We don't expect VSF prices to correct in the same proportion or same extent as cotton prices. Cotton is more speculative, more volatile.
Okay. So can we conclude that the demand supply prospects and the market balance prospects of VSF currently is appearing to be much stronger than the cotton market?
This is not just the demand supply situation, but also a play of market expectation. Because now everybody, the brands are expecting the prices to be more volatile, or they are having their inventory of garments, so they are not releasing orders. And people are expecting prices to go down more or remain soft. And in this high interest regime, people are very careful in building up inventories. Rather, inventory correction is happening. So there are many factors in saying it is not just simple demand and supply alone.
Understood. I have more questions, but I'll join the queue. Thank you and all the best.
Thank you.
Thank you. We have next question from the line of Naveen Sahadio with Nuvama Institutional Equities. Please go ahead.
Yeah, thank you. Good evening, everyone, and thank you for the opportunity. Just taking on the previous question about VSF, while your presentation and, of course, even the global data suggested that VSF prices are on a decline, but is the understanding correct that for us, the net realizations are actually slightly higher sequentially?
Essentially, the realization is mostly flat.
Okay.
But internationally, prices have come down, but Indian rupee depreciation has also helped to modify that. But the international prices and the general tendency of the prices is towards softening.
Understood. So even then, we have outperformed largely. I think the realizations for us have outperformed the global prices largely because of currency depreciation. Is that the correct understanding?
Yes.
And just on this, that as I think the current spot prices are much weaker than even the exit prices, which your presentation says were down by about 4%. So is it again safe to really expect that, of course, medium term can be good, but the immediate quarter, which is, let's say, the December quarter, can see further margin compression sequentially because the way the spot prices are?
Yeah, this is a very reasonable expectation and interpretation of the current situation. Yes.
Understood. Thank you. My second question was on the paint segment, and this was more to get conviction or confidence in that business since it's a new business for us. So when you say that the pilot plant has started, can you give more color as to what exactly does it mean? Are we doing test marketing in certain regions, or what exactly does this mean? What is the capacity of this pilot project? And when we say Q4 commercial production, Q2FY23, the commercial production is expected to start, what would that capacity be? Thank you.
Rakshit, would you like to respond?
Okay. So as far as the pilot plant is considered, obviously it is a small plant expected to make test quantities because launching for the first time, we would want to validate all the products in the market. And as far as the first factory that we are talking about going online in December 23, as we had disclosed that we are setting up 1.3 billion milliliters per annum capacity, the first factory would be in the range of about 200 to 220 odd million liter per annum.
Understood. That's helpful. But are we also then, when we say testing the product, are we then also saying that we will be starting appointing dealers and the brand rollout also happens now to see the test success of it, or how exactly do we get confidence on this?
No, so like we have said that the launch can only happen once when the actual factory is commercialized. So it will follow the timelines likewise.
Yeah, but when you say pilot a project, as in we are going to set the viability of the project, products, you say?
No, the pilot plant is for testing the product performance and validity. It is for that purpose. It has got nothing to do with the commercialization.
Understood. Helpful. Thank you. Thank you very much.
Thank you. We have next question from the line of Pinakin Parekh with JP Morgan. Please go ahead.
Yeah, thank you very much, sir. So my first question is on the capex. So the press release mentions a capex roughly of 6,700 crores versus first half spent of 1,500 crores. So that implies second half of roughly 5,200 crores. Now, Grasim standalone was a net cash balance sheet of just 500 crores. So in the second half of the year, would it be fair to say that there could be additional borrowings to fund this capex, or will basically Grasim run down its existing treasury operations to fund the second half capex?
That will depend upon the speed of spending, but we will look at the opportunities. If there are good opportunities to borrow, we will do borrowing, and if there's the current volatility in the interest rates are good enough to liquidate some part of the treasury, we'll do that. So net, we don't expect to be net zero debt by year end. We will have some net debt on the balance sheet by year end.
Sure, sir. So just trying to understand that the second half capex implies more than a tripling of the first half capex. So in terms of the spending, what are the downside risks to this to the budgeted program? Because this is a very sharp step up in spending that the company proposes.
So there is a possibility of some slowdown in the spending, but there may not be any material difference, because see what happens now, generally the approvals and ordering etc. take place in mostly Q1 and Q2. The actual work starts now in the second half.
Understood, sir. And so just a clarification on the paints business. So the pilot plant is scheduled sometime this year, and the first plant gets commissioned in Q4FY24. In terms of the launching of the brand for the paints business and the marketing and the brand building, should we expect that to happen after the first plant is commissioned? So that would be more like FY25, or would that start in the next 2 quarters before the first plant gets commissioned? Just trying to understand the sequencing of that part of the launch.
Yeah, Rakshit.
So if I might add, the brand launch can only happen with the proper launch, which will start with the factory, and we will adhere to that schedule.
Okay, so it's fair to say it will happen only after the first plant gets commissioned in the fourth quarter F24.
Yes.
Understood. Thank you very much.
Thank you. We have next question from the line of Nirav Jimudia with Anvil Research. Please go ahead.
Yeah, good afternoon, sir. So I have a question on the chemicals. Sir, your presentation says that we have been able to increase our VAP production substantially because of the commissioning of CMS capacity which happened in October 2021. So if you can just let us know what is the capacity utilization of the CMS plant in Q2FY23, and along with that, if you can help us explain what was the increase in the EBITDA of VAP in H1FY23 versus H1FY22, even if a percentage margins would help, sir.
So the CMS plant was actually a vertical startup. I think we reached 85% capacity within the first quarter of its launch, which was October. So by December or January of the production, we were able to hit about 85% mark, and we've been hovering at that capacity utilization ever since, depending upon market reactions between 90 to 80% is what we want. That's prior to your first question. The second one, in terms of the differential in your margin of VAPs, give me a minute and I'll just pull the data out. So if at the end of the day, we've got about, let's say we've got about a 20% or 20 to 30% odd jump on our EBITDA on the VAP side, because the VAP side actually runs into multiple products.
Correct.
So, no, it's actually down by around 20 to 30%. Sorry, I set it up. For a simple reason that chlorine has been highly impacted in the Q2 on its negative pricing.
Correct. But sir, when we transfer the chlorine from the caustic to the VAP side, that happens on a transfer pricing, I believe. So because in Q2 we have seen chlorine prices going as negative up to 9-10 rupees also. So wouldn't that have been captured in the incremental VAP profits?
Your point is absolutely fair. See, what happens is the caustic running on high realization in the market. Everybody has been producing caustic at the cost of chlorine being sold at a high negative.
Correct.
So while you might be in a situation where you're transferring at the market price the chlorine negative price to your products.
Yeah.
So are the others doing at the same level, and there has been a lot of intensity and competition on the chlorine derivative side along with that of chlorine. So both of them have seen a subdued margin compared to Q1.
Got it. So what you mentioned is as compared to last H1, this H1 we have seen actually 20 to 30% decline in VAP's profits. This is what you have been trying to say.
While our volumes have gone up,
yeah,
but our margins have come down, but it gets more than adequately compensated with the caustic prices.
That's true. Sir, second question.
You're doing between the three of them.
Yeah. So second question is on the epoxy as well as the ECH capex. So if you can just let us know the timeline of the commissioning of both the projects, what is the total capex for both of them and how much we have spent till date. And a related question is, because you have mentioned that we have seen the specialty share of epoxy going up in the overall portfolio this quarter. So if you can just help us explain what's our current share of specialty epoxy in our overall epoxy sales, and once our new capacities would be commissioned, how that mix would look like.
So let me give you the commissioning time of the epoxy and ECH separately. For epoxy, it will be Q1 of FY24, and for ECH, it will be Q1 of FY25.
Okay.
Now, that's what the timelines are. See, at the moment, I think largely both the plants are just at the moment closing on their negotiations for capital equipment. So not a lot of material amount of capex has been spent. And as Mr. Jain was saying, largely the capex spends will come in the H2 part, is when the true ordering will be happening. Here you are mostly closing the negotiations and the technology alignments.
Correct. And sir, but if you can just run upon on the total capex that needs to be spent on both the projects cumulatively, that would be helpful.
So epoxy, the total spending of the doubling of the capacity would be about 360 crore rupees.
Okay.
And ECH
will be somewhere around 450 crore plus.
Okay, 454 crores, which this is what you mentioned, right?
Yeah.
Correct. And sir, my question on the specialty epoxy, if you can just give some understanding on the same, that would be helpful.
If the specialty chemical, the specialty part of epoxy is doing very well. It is in the range of about 30-35%.
Okay. And is it safe to assume that once we double our capacity, that mix would continue to remain at those levels, or that mix would see an upward tick once those incremental capacities would be in place?
So I think it's a question a little premature to answer at this moment.
Okay.
Logically, yes, the tick would be on the positive side, but very difficult to put a number or a figure today on it.
Got it, sir. And sir, last question.
I'm sorry to interrupt. Sir, please come back in the question queue. Thank you. We have next question from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good evening, sir. My first question is a bookkeeping question. Can you data on VFY segment revenue and EBITDA for the quarter?
So, see, we are not giving separately numbers of VFY, EBITDA and revenue etc. But as I told you, the VFI volumes are doing well. VFI volumes are up by 31% this quarter on YOY basis. And the cost increase in the VFI we have been able to pass on because of the good demand conditions of this year.
So this quarter onwards, we will not be giving VFI data because till last quarter we were giving the data.
No, we are not. I don't think we have separately given any VFI data.
So we were giving every quarter this data since ever.
Okay, so we will possibly share that. I think let us recheck that. So the VFI business on the directionally, let me share with you. The VFI business has done well during this quarter. Their EBITDA is up and the volumes are up. The prices they are able to pass on the cost increase in the realizations.
Sure. Okay. My second question is on on capex. So second half, if hypothetically if we see some lower capex versus projected capex of over 5,000 crores, would that impact the timelines for first plant of paints in FY24, or is it related to? It could be related to some other projects.
No. See, the paints we have already told you that the first plant will be commissioned in Q4 next year. So that we are on track. For the existing businesses, especially on the modernization and normal maintenance capex, there may be some slowdown or some delays, and which actually gets rolled over to the next year. But there may not be a large difference between what we have already projected versus actual.
Sure. And one question on VSF profitability. It probably has slipped to below 15 rupees per kg this quarter, or closer to 10 rupees per kg. So this seems to be the second lowest or third lowest kind of profitability in past many quarters, leaving aside the COVID quarter of Q1/21. How should we sort of look at this profitability? Let's say beyond 3Q, which is expected to be much weaker, but beyond 3Q, how should we look at the profitability in the segment?
See, VSF profitability is expected to remain under pressure for the time being because input prices remain elevated, and in line with the cotton, the sentiments are depressed, and the VSF price is also affected by continuous lockdown in China and slowdown in demand in Europe and USA, which are the major textile consuming centers. So for the time being, VSF margins will most likely remain subdued.
Sure, sir. These are my questions. Thank you.
Thank you. We have next question from the line of Vipul Shah with Sumangal Investment. Please go ahead.
Hi, sir. Thank you for the opportunity. So my question is, sir, how do we calculate ECU per ton? Means only chlorine is included in the byproduct. Means one ton of caustic soda produces how much chlorine?
So ECU is calculated as a function of the caustic, both liquid and solid, also chlorine, and then hydrochloric acid. And the formula for chlorine production is 1 ton of caustic generates 0.89 tons of chlorine.
Okay, so there we are carrying negative carry as on today, right?
Not on your own, if 1 ton produces close to 0.9, and that's running in positive, and one is running at 9 to 10 rupees negative, as stated in this thing, that you can figure out.
Okay, sir. And my second question is, we are totally self-sufficient as far as pulp is concerned for our VSF business, or we have to purchase any pulp from the market?
So we do have to purchase pulp from market. Our integration is in the range of about 35%. And we have long-term arrangement with some world-renowned suppliers. We have formula-based pricing. So we do have to purchase pulp from outside to that extent, about 2/3.
Okay, sir. So only 35% we are integrated.
Yeah.
Okay.
But here
Thank you,
just
sir.
I would like to add, see, we have our pulp JVs. One of the JV plant is paper grade pulp. They manufacture paper grade pulp. So we also sell that paper grade pulp in the market, and at the same time we buy the DZ grade, our VSF grade pulp. So if we add that, then our integration goes to about 45%. So we have kind of hedging, no, when we have the paper grade pulp which goes to the market, and we buy the VSF grade pulp.
So any plan to increase our pulp integration over medium term, sir?
So we are doing a small debottlenecking at Harrier, but of course it is a small thing. And then we are working on some plans for circularity, where we will have plans to use the used garment, cotton garments, but it is still some time away. But that is the way to increase or reduce the need for virgin pulp.
Thank you. We have next question from the line of Shalini Vasant with DSP Mutual Fund. Please go ahead. Thank you. We have next question from the line of Asim Barde with DAM Capital Advisors. Please go ahead.
Yeah, hi. Just one question. Wanted an update on your tie-up with Lubrizol to manufacture CPVC resin. The tie-up was announced in late 2020, and the first phase was supposed to start by end 2022. So what is the status on this one now?
So there was a change of management at Lubrizol that has led to a delay. So there was about 12 to 18 months of, while the new management settled down and delay. Now things are back on track, and we expect that in about 24 months, the execution will be kind of over at their end. That's the communication we received from them.
24 months from today, right?
Yeah.
And that would be for the first phase or for the entire plant?
For the first phase. We are only talking first phase.
First phase. And just lastly, we are not spending anything over here, right? It's entirely their capital?
There is no capital burden on Grasim at all for this particular project.
Okay. Thank you. Thanks a lot.
Thank you. We have a next question from the line of Jiten Doshi with Enam Asset Management. Please go ahead.
Good afternoon, sir. I would like to ask you about your paint business. What is the capitalized loss that you're projecting just before commencement, or what sort of interest or losses would you capitalize prior to commencement?
So the interest till the plant commissioning will be capitalized. I don't have readily numbers at the moment. Rakshit, do you have that interest capitalized number readily available with you?
No, I don't have it readily available. But
so we can share with you separately.
Sure. And sir, I wanted to ask you that at full capacity, what do you really estimate the paint business turnover? Because you would be putting this capex with some calculation. So roughly going by whatever capex that you're putting in, what should be your output in terms of top line from this at full capacity?
So, the way I would want to answer this question is that we have declared that we are setting up 1.3 billion liters capacity. And you would know what is the percentage utilization, capacity utilization in major paint companies. And then it becomes a function of pricing. So, I don't think that I want to disclose anything on how would the pricing in the market, develop once when we come in and after a few years. But I think the answer lies in putting those dots together. So, that's how. So we would not want to share in terms of, what have been our assumptions on our business plan at the moment. But, these are how the building blocks will look like.
No, so I assume that, there will be some sort of a calculation which will be a return on capital employed number that I'm looking for. Not really your strategy in terms of how you're going to price, etc. I'm just saying what sort of return on capital employed can we expect, let's say, in year 3? Not in year 1.
Okay. So the way we are looking at is that we are looking towards keeping the EBITDA losses to a reasonable amount and to become a profitable business as soon as possible. Okay.
So, just to get it, would at full capacity, would you be doing a 3x of the gross block, or what number can we factor in from the gross asset base?
So I think, Pawan, maybe we could engage separately in terms of clearing these queries, with whatever numbers we can share with them.
Yeah, so as of now, it is very uncertain to give any kind of numbers of year 3 or year 4 or year 5. So, we are still away from the actual, the product coming to the market and how the, for example, input prices will behave and all that. So it is not a year 1, 2 or 3 kind of story. We are in paints for the long haul. So I think let us come to a stage where we can give you some kind of numbers on the paints business.
Thank you. We have next question from the line of Shalini Vasant with DSP Mutual Fund. Please go ahead.
Hi, this is Vivek Ramkran. Sorry, I got cut last time. My question, if you do a rough cut mathematics, the net debt goes up to about 2,000 crores as at March 23. I just want to know whether that number is correct. And is there a debt to EBITDA guidance that you have for a longer period of time as you undertake this large capex? That's question number 1. And question number 2 is whether there is any working capital release that you anticipate in the second half, given the fact that prices have come down and supply chain constraints have become less. That's it from my side.
So on the net debt to EBITDA, we will at the peak of the capex, once we are done with the paints capex, everything, then we may have about 2.73 kind of net debt to EBITDA. That is our current estimate. But it will all depend upon how the profitability pans out over the years. That is one part. And the second question was about, your question was about what?
On the working capital release, sir, whether there is, because, supply chain constraints have come down, any working capital release do you anticipate?
Not any large amount. We are already working in the VSF business, for example, on a net negative working capital basis. And some kind of inventory build-up is possible because of the demand slowdown in VSF business, for example. So not any large working capital release is expected in the current year. We are actually already doing a negative working capital level in our 2 businesses, one textiles and VSF.
Okay, thank you very much, sir, and wish you good luck.
Thank you. We have next question from the line of Nirav Jimodia with Anvil Research. Please go ahead.
Yes, sir. Thanks for the opportunity again. Sir, my question is on the chemical side. So I have 2 questions on the same. So, sir, you mentioned that we have been increasing our capex on the chemical side for increasing the capacities of the VAPs. So once this land is purchased and we keep on adding those products on that infrastructure, how much our chlorine integration would go up on the increased capacity of caustic soda?
So let me take that question, Jay, this time. So I think we announced earlier in I think last year in one of our calls that we are expanding our capacity from 1,000 tons to 1,400 tons of at Vilayat.
Yeah.
This purchase of land will only get used for the chlorine consumption of Vilayat plant.
Okay.
So Vilayat plant at full capacity utilization, let's say at a 90% capacity utilization of 1,400, and with this new land, we will be able to reach, I can't give an exact number because it needs the time, between 70 to 75, 77% of total chlorine consumption.
Okay, and this includes our pipeline sales also?
Actually, yes, this includes the pipeline sales also. This is the way our chlorine definition is.
Correct. And sir, when we see our VAP sales, I think from 2016 to 2023, if we see the chlorine integration, I think it is almost double. So from 1,60,000 to now, a run rate of almost 3,30,000 tons. So once we come up with the new products at land, what you mentioned, is it fair to assume that the margins on a per kg basis would be higher for the new products vis-a-vis the existing basket of products we manufacture?
Let me not go into any guidance of that at this point of time. I think as and when we formulate our plans and put it up to the board, the approvals will come through. I think this will be a more pertinent question at that point of time, because what we'll be sharing with you would be our own internal discussion rather than an approved discussion plan. So let's stay with the we'll come to that question when we come to those approval stages.
Got it. And sir, one more question if you allow, and if you can share with us. So what was the average coal cost for us in Q2FY23 vis-a-vis Q4 of FY22? So if we take Q4 of FY22 as a base, what was the coal cost for us in Q2 of FY23 for the chemical business? Even a percentage increase or a decrease would also help us, sir.
So I wouldn't know the coal cost because at the end of the day we look at it from a gross calorific value and its consumption. But from a Q4 of last year to Q2 of this year, my guesstimate would be that we would have, the coal costs have kind of jumped by on a year-on-year basis about 130 to 142% depending upon the country.
Okay.
And if you look at it from a quarter to quarter, it's between 6 to 10%. Okay. So it's a fairly high volatile scenario on the coal front as of now.
Okay. And sir, a small clarification on the VSF sales and the EBITDA, what you mentioned in your opening remarks. So what you mentioned is 3,241 crores of sales and an operating profit of 210 crores. This is what you mentioned in your opening remarks, right?
Yeah.
Okay. Thanks a lot and all the best.
Thank you. We have next question from the line of Sean Ongarier with Chronux Research. Please go ahead.
Good afternoon, everyone. Thank you for the time. Just some questions focused around the VSF business. Just in terms of the comments you made earlier about VSF capacity having to be rationalized, I think you said around 70%. I'm just confirming that number. And then secondly, I guess you must already sort of answered this, but more confirmation that it must probably like to be like this for a couple of quarters, given your comments around margins being subdued. That's my first question.
So the current capacity utilizations are rationalized at about 70%, and we expect the demands to be back sometime maybe in next couple of quarters. Till then, we will continue to monitor the situation and will align the production levels accordingly.
Okay, very clear. Thanks. And then if I just look at your current full year capacity, that's sitting at about 824,000 tons. With the sort of planned capex in terms of modernizations and anything else, is that capacity going to increase further? And if so, by when and how much?
So there are small increases in the specialty products, which is about 13,000 tons. Yes, but these are
third generation of VSF fiber, and that is all about the capacity increase. There is not much capacity increase in the normal VSF. The small debottlenecking.
Okay, great. Okay, excellent. That's great. And then your comment around DP or dissolving wood pulp integration into the VSF business earlier, I think you said it's around 35%. Is that pre or post the current debottlenecking that you got planned?
It is at the full capacity.
So once the debottlening's done, you get 35% integrated. Is that what you're saying?
Yeah, at the current capacity level, it is about 35% integration, and we are increasing the capacity as we shared at one of our Indian pulp plant. That will take the integration to about 37% of the capacity. Then fiber capacity will also increase.
Thank you. We have next question from the line of Abhimanyu Kasliwal with Choice India Limited. Please go ahead.
Thank you so much for taking my question, sir. Most of my questions have been answered, so I had just two specific queries. Number one was regarding your platform business, the P2B business. What can we expect? How do we forecast this business? Will this be a game changer in terms of revenues, in terms of margins? What is the company's expectations? And my second question, sir, is in other income. I've noticed there's a pattern that in the September quarter there is a substantial jump up, and is this the case? Or is it that the past 3 Septembers, for some reason, it has just jumped up? How do we forecast the other income? What is the reason? These are my two questions, sir.
So, the first one is about the B2B platform. So, the B2B e-commerce platform is expected to be a high growth business in terms of revenue. And since it is an e-commerce business, the margins are not going to be very large margins there, but the top line could be very significant. So, and our aim is to be one of the largest e-com players in B2B segment, especially in the building material segment. So that is the, B2B e-commerce.
So to interrupt, would it be like an India Mart for building materials? Is it a correct way to look at it?
Yeah, India Mart does, I think, industrial products. We are from building material segment. We have the ecosystem for the building material businesses in the group. So we have large kind of customers who are buying cement from us, or now they'll be buying paint from us. So the same ecosystem will be available for the B2B platform business.
Okay, so we're expecting easy runs on the board from this one, hopefully.
Yes.
Okay, so my next question
is about your other income.
Yes.
The other income is Q2 will be significantly higher every quarter because we get the dividends from our subsidiaries and other investments. So the large dividend income comes from Ultratech. So for example, in this quarter, about 618 crore rupees has come from dividend from Ultratech.
Understood, sir. Thank you so much. Best of luck.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session, and I'd like to turn the conference back over to Mr. Pavan Jain for closing remarks. Over to you, sir.
So thank you all for joining us for this call today, and we'll meet next quarter again.
Thank you very much, sir. Ladies and gentlemen, on behalf of Grasim Industries Limited, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines.